So, let's talk about one of the wildest, most audacious corporate plays in modern history. We're going to break down how one company decided to bet everything, and I mean everything, on a single incredibly volatile asset. And in doing so, they might just be rewriting the entire playbook for corporate finance. We're talking about Strategy Inc.
All right, let's just jump right in with the most mind-blowing fact. Get this, Strategy Inc. now owns 3.1% of all the Bitcoin that will ever exist. Let that sink in. No single company owns that big of a slice of the world's gold or oil. It's a level of concentration in a global asset that is, well, it's completely unheard of.
And what does that 3.1% actually look like? Well, as of late 2025, it's this number right here. Over 640,000 Bitcoin just sitting on their books. A number that has just kept climbing and climbing quarter after quarter, ever since they started this crazy journey back in 2020.
Now that giant pile of Bitcoin gives them a market cap of $83 billion. That makes them the 131st largest public company in the US. We're talking about them being in the same league as absolute giants like Boeing and Ford. It's wild.
And you know what? This strategy seems to be paying off, at least on paper. In the first 9 months of 2025 alone, their operating income was a massive $12 billion. Now, to give you some perspective, that's a huge swing from an $800 million loss in the same period just the year before.
So, the big question is, how is this even possible? How does a company pull this off? Let's peel back the layers and figure out who Clash Strategy actually is.
Okay, so let's get into their playbook. And you know what's funny? It's deceptively simple, but it's also incredibly powerful, especially if you're a big believer in Bitcoin's future.
This right here is the absolute key to understanding everything. Strategy isn't just a software company anymore. No, they've completely transformed themselves into what they call a Bitcoin Treasury Company. Their main business, their reason for being, is now to raise money from you, the investors, for one single purpose: to buy more Bitcoin. They've chained their fate directly to that rocket ship.
And here it is, their whole process in 3 simple steps. First, they raise cash by selling stocks and debt. Second, they take all that money and just buy Bitcoin. And third, they use that enormous growing pile of Bitcoin to generate value for their investors. It's a simple rinse and repeat cycle that has fueled this incredible growth.
So that's the blueprint. But did it work? Well, let's look at the scorecard from their third quarter of 2025. This quarter wasn't just profitable. For them, it was like a massive validation of their entire strategy.
Just look at these numbers. They really do tell the whole story. In just 1 year, they went from losing $400 million to bringing in nearly $4 billion in operating income. Net income? It swung from a $300 million loss to a $2.8 billion profit. I mean, that's not a turnaround, that's a different stratosphere.
But you know what? The wins weren't just about the profits. The actual rules of the game started changing in their favor. First, a huge tax clarification came through. Basically, the IRS said they wouldn't get hit with a giant tax bill for Bitcoin gains they hadn't actually sold yet. That's huge. And second, new accounting rules finally let them show the real, up-to-the-minute market value of their Bitcoin on their books, giving investors a much clearer picture.
But this might have been the biggest victory of them all. Standard & Poor's, one of the old-school pillars of traditional finance, gave them a credit rating. Now, why is that such a big deal? Because it was the first time ever that a major agency gave its official stamp of approval to a company like this, signaling to a whole world of more conservative investors that, hey, maybe it's safe to get in the water.
And for Strategy, these victories aren't just a string of good luck. They frame them as part of a much bigger narrative, Bitcoin's inevitable march onto Wall Street.
So, how do they make their case for this Wall Street takeover? Well, they point to what they see as clear signs of mainstream acceptance. They highlight comments and actions from both government figures and major financial institutions, arguing this all points to a massive, widespread embrace of Bitcoin. Let's take a look at the evidence they present.
For example, they'll point to a headline just like this one. I mean, when a titan like JP Morgan starts accepting Bitcoin as collateral for loans, they're treating it just like they treat stocks or real estate. In Strategy's eyes, that's a fundamental step toward legitimizing Bitcoin as a core financial asset.
They also highlight the build-out of crucial infrastructure. See, when a bank like Citi plans to launch custody services, that's the plumbing of Wall Street we're talking about, the boring but absolutely essential systems for holding and trading assets. And it's being rebuilt to handle crypto at a massive scale.
And finally, they point to what could be a massive opening of the floodgates.
When a wealth management giant like Morgan Stanley makes it easier for their high-net-worth clients to invest in crypto, it signals that a huge wave of new money could be coming into the space, which, of course, would theoretically drive up the value of Strategy's own massive holdings.
So, with this grand vision in mind, what is Strategy actually selling to investors? Well, they've basically built a whole financial machine, and it's powered entirely by their Bitcoin.
They offer you two very different ways to get in on the action. You can buy their stock, which they call digital equity. Think of it as a leveraged, high-risk, high-reward bet on the price of Bitcoin. Or you can go for their digital credit products, which are more like bonds. They offer a steady, fixed income stream, and they're backed by all that Bitcoin.
And this chart just lays out that risk spectrum so perfectly. On the far left, you've got their stock, which is way more volatile than even Bitcoin itself. It's the roller coaster ride. But then, way over on the right, you have one of their credit products, which is dramatically more stable. They're literally letting investors choose their own adventure.
And they argue that this digital credit is actually a superior form of finance. Here's their pitch. It's backed by what they call digital capital, Bitcoin, which they believe will appreciate unlike, say, a car loan where the collateral depreciates. It's also permanent capital, so they don't have to worry about refinancing risk. And here's the real kicker for investors. The income can be structured to be tax-deferred, potentially for a decade or even longer.
And this all leads to their ultimate vision, what they call a digital credit factory. It's a financial machine that uses Bitcoin as its engine to crank out a whole new type of scalable, efficient, and tax-friendly yield for investors all over the world.
And that, right there, brings us to the core tension of this whole story. The company and its fans, they see a revolutionary new way to create value. But its critics, they see the world's biggest, most public, most leveraged bet on a single asset class, a giant house of cards just waiting for the next crypto winter. So the final $83 billion question remains, is this the future of finance, or is it the most audacious gamble of our time?